How's it going, everybody? It is Dennis, and we're back with another video, another presentation. And as you can see behind me, we are talking about the future of Tesla. Of course, Q1 financials are coming up for 2024 next week as of recording this video on Wednesday, April 17th. So Q1 financials are coming up next week, and we have received the amount of vehicles that have been sold and made for Q1 of 2024. So let's go ahead and go into it. Of course, I myself am invested into Tesla. I own TSLL and TSLY. TSLL is a leveraged ETF or stock for Tesla, and TSLY is a dividend-paying ETF that trades on the underlying of Tesla. So let's go ahead and get into it. So Q1 deliveries, they were lower than expected. They were a lot lower than expected. They did decline compared to Q1 of 2023. For Q1 2024, we delivered 386,000 vehicles and we produced 433,000. For Q1 of 2023, we sold 422,000 and we created 440,000 vehicles. As you can see, it has declined. The reason for the declines are many. A lot of people speculate that Teslas are just not selling, and there's a lot of reasons that are being thrown around. But there's also a lot of economic factors as well as factors due to growth of Tesla. And we're going to go ahead and get into it right now. First off, interest rates and inflation. A lot of people forget that interest rates and inflation is still there. It has not gone away. Even if we are staying at interest rates of 5.33%, it has not gone away. It is actually growing, and CPI reports of last month have come in hot at 3.5%. And that is why we're still at 5.33% for interest rates. Interest rates will probably not be going down this year, and if they are, we might just get one cut. Based off Jerome Powell's latest meeting of yesterday, on Tuesday, April 16th, he had a meeting with Canadian financial minister saying that interest rates might not get cut. And the reason being is because CPI keeps coming in hot and inflation is not coming down. Before they said we'll get 3 cuts, then they said we're getting 2 cuts. And now we might not even get 1 cut. We might not get any interest cuts at all. Now, what does this mean for Tesla? Well, of course, if inflation is high, interest is high. And if interest is high, then your interest on your vehicle is high as well. A lot of manufacturers, a lot of companies right now are having issues selling cars, as Ford, Toyota, Honda, because their interest rates are high, and therefore people are not willing to purchase and pay that finances for the 72 months of finances, 60 months of finances that you could get your vehicle for. They're not willing to pay that monthly expense. Even for a lease, they're not willing to get that monthly expense. And that is where Tesla comes in. Of course, Tesla has dropped their lease price as of today, April 17th of Wednesday, to $299 a month for their Model 3 standard model, right? They're avidly lowering their interest rates, they're avidly lowering their monthly payments, therefore lowering their margins. They're lowering the prices of the Model 3 and the Model Y. But recently, of course, they have shifted, and we'll get into that. But they are lowering prices, and with lowering prices of their vehicle, so they could go and sell to more customers, they are lowering their margins. And margins are very important. And we will see later on that the margins were down in 2023 and probably remain the same in 2024, which we'll see in Q1 financials of 2024. But $299 a month for the Model 3 Standard Edition. It is a pretty good price, but people are still not taking. And what's the reason? Well, I guess people do not find $299 to be good enough to purchase, or lease at least. And also there's another reason for why you can't buy the lease at the end of your 3 years or 2 years. And that is also another reason why people might not want to get a Tesla. But with that, the finances are just high. It's quite understandable. Interest rates are high, inflation is high. There's not much you can do. People just don't want to purchase cars, and that's might be a reason. I'm not saying that is 100% the reason, but that could be a reason why customers are not going to Tesla, why customers in general are not purchasing vehicles. As well as, we had the upgraded Model 3. Now you might be thinking, wow, we got an upgraded Model 3. We have all new features in it, cooled seats, heated seats in the back. We have a new screen in the back, all new design. Well, not all new design, a little bit redesigned, right? Why would that cost them, purchases? Why would that cost lower deliveries? Well, the reason being is because it was first released in Europe. It was released in Europe, and therefore a lot of Americans, the American market was waiting for it to arrive in America. It was released in Europe on August 31st, 2023. Of course, it didn't start getting delivered until further into 2023, a little bit later into 2023. And when it got into America, well, it got into America in January, and it wasn't getting delivered until February or April. So there's a lot of time, February and March, and there wasn't a lot of time for them to catch up and get the sales, because a lot of people were just waiting. And due to that waiting to get the new Model 3, a lot of purchases weren't made. Of course, they did lower prices, like mentioned before, to try to get people to buy the inventory that's left over. But that's just how the market works. A lot of people don't want the old vehicles, and they want to get the new Model 3. Therefore, that's probably another reason why people weren't purchasing Model 3s, because people just want to wait for the new one. And that could have contributed to the fact that we didn't get enough deliveries for Q1. And also, another reason, there's going to take a little while to go through the reasons of why we got such low deliveries. We have and still have interest rates and inflation that's high. We have vehicles coming out, new vehicles coming out as the Model 3, and a lot of people waiting for that new model. And now we also have factory shutdowns. We had the factory shutdown in Berlin, Germany for 2 weeks, which delayed the amount of vehicles that could be produced because of the Red Sea conflicts. We also had shutdowns in Shanghai to go ahead and change the production line for the new Model 3. So there's a bunch of shutdowns, there's inflation rates and interest rates, and there's new models coming out, which a lot of people are waiting for. That is probably why we're getting less sales in Q1. It's quite expected. It is expected. We have all these shutdowns, and we have all these issues coming in for the last section of Q3 and the first quarter of section of Q1 of 2024. It is expected that we would have issues with deliveries, right? And of course, we have Cybertruck. Cybertruck was released. Cybertruck was being added into the line in Texas, and that will also have slowdowns on the Model Y creation and the Model Y deliveries, because people are now waiting also for the Cybertruck. So the more you expand the amount of vehicles you have, it also lowers deliveries, because people, instead of getting the Model Y or getting the Model 3 or maybe getting the Model X or the S, right, they're going to go ahead and wait for the Cybertruck because it's the cool new thing. And by the way, all these Cybertrucks are sold out. Of course, there is the new issue of the pedal getting stuck, but that's a quick fix, and they're already working on it, and it'll probably be done by the end of this week. But the Cybertruck is also competition to its own vehicles, and is also creating a situation where people are waiting for the Cybertruck rather than purchasing, let's say, a Model X or a Model S, right? Or even Model 3, depends on where their finances are. I'm not quite sure how people's finances are. Maybe they're willing to pay for a Cybertruck, and even though they could, they're looking at a Model 3, who knows? But because of the line being updated in Texas and them needing to update the line and add more space for the Cybertruck and start that back up, and also, you have to teach a whole new crew how to create this Cybertruck, I would imagine this also affected deliveries. Now, let's look at we're done looking at all the reasons for why we could have got such low deliveries. No more excuses. Let's look at the straight numbers. This is from Q4 of 2023. In California, they're able to create 650,000 vehicles of Model S, X, 3, and Y altogether, comes out to 650,000. For Model 3 and Model Y in Shanghai, they create 750,000 roughly. For the Model Y in Berlin, they create 375,000. And in Texas, for the Model Y, they create 250,000. All that together, right? I'm looking right now on my screen as well. All that together comes out to close of 2 million cars, right? 2 million cars created, roughly. A little bit under, a little bit over, depending on how it goes, right? You have the notations next to Shanghai and Texas that is currently increasing throughout of course, from Q4 of 2023, it could be increasing to now Q1 of 2024. So it is close to 2 million. That 2 million number they said they will create and they will put out for 2024. It's getting there. This is Q3 2023, and they're already saying that they're able to deliver roughly 2 million cars from these factories for the next year. Now, they're avidly increasing the speeds that they're working at. They're avidly increasing the amount of lines they have, and they're also introducing another plant. Of course, this plant will not go into effect probably in a couple of years, but they are also looking at a plant in India. And of course, they're flying out there. They're slowly getting the ability to start producing that in India, getting them taxes and all the economic things down. But it's coming. India's coming. Mexico is coming probably. We're getting all these new factories that are coming, which will increase the production of these vehicles and also increase the market of this vehicle. India is a huge market that has yet to be attacked. It does not allow China's vehicles into India. They have restrictions on Chinese vehicles. They have restrictions on a lot of vehicles. But if Tesla is able to get into India and create those vehicles well, if they're able to create those vehicles for cheap and they're able to sell them to the Indian market, that will increase sales dramatically. And a lot of people are not talking about it. A lot of people are not talking about it. And that is why I'm bullish on Tesla and why I created the slide in general. But there's more. There's more. There's also new ventures, and those new ventures could be financed by Tesla's sales, right? Of course, sales might be down for Q1. Maybe they don't grow as much as they did in 2023. Of course, we're in different economics times at the moment, but 2024, we might stay at the same pace or we might increase less than expected. But those margins that we are getting from the sales of cars, from the Model Y3, from the 3Y Cybertruck, and all the other cars, those margins will go into the new ventures, which will then produce even more income for the company. And that is, of course, with FSD Supervised. FSD Supervised was just released last week and is lowered to $99 a month. And of course, it is coming out to the masses. It is slowly being rolled out to the masses, and people are going to be able to afford it for a little bit cheaper. Instead of $199 a month, it will drop to $99 a month. It's a good cut. I think a lot of people will take it, as well as seeing all the information that's coming out. They're slowly starting to create more YouTube videos, more marketing, which we'll get into later, the marketing of Tesla. They're creating more marketing for FSD Supervised. They're creating a lot of help and a lot of things around FSD Supervised. And overall, it is slowly growing more and more. With FSD Supervised, we also get the announcement of Cybertaxi, or Tesla Taxi, or whatever you want to call it. But we're getting a taxi service, or that's going to be driving itself around. And of course, it has been leaked that the taxi service will be built off the Model 2 framework, which will be the cheaper model. Of course, there has been some rumors that the Model 2 has been canceled or has been put on the back burner, and we might not be getting it as soon as we think. But I believe that if we get this Robotaxi, we will then get the Model 2 because they will be based off the same vehicle. Now, if we give all this is already boost to the income Tesla earns. The FSD Supervised is crazy margins because you created this product, you have a couple engineers working on it, you're keeping up on the updates, and you're doing all that work. But the growth aspect on FSD, it's just a download. There's no vehicle to be created. It is a software that is installed on your vehicle, and we get a constant $99 a month coming in from the whole fleet. Even if it's not the whole fleet, even if it's 25% of the fleet, that is $99 a month coming from 25% of the fleet that's already existed and out there driving around, as well as the data that we are receiving and the possibilities of branching out to other companies, such as has been done with the charging network, with the FSD Supervised, and selling that off to other companies. Now, there's more. Like I said, just mentioned before, charging has increased as well. Charging and battery technology for Tesla is increasing, and they're improving the amount that they're putting out there. With supercharger stations, we did have an increase of 5,952 in Q4, in 2023. In 2023, we also had an increase of supercharger connectors to 54,892. And we also had more storage deployed of 14,724 batteries deployed of storage. More than 2 times deployed compared to 2022 of 6,541. That is crazy numbers. Sorry if I was in the way, but these are the numbers right here. This is the amount that was deployed for Q4 2023. For the whole 2023, we got all these numbers right here in red. That's a crazy amount of numbers, and the margins on them are very nice. Especially like mentioned before, if you are opening up your charger systems, which they're opening up their charger systems to Rivian, to Ford, to all these different companies, that is increasing the amount of profits you are receiving from the charging stations, not only being available to just Teslas, but all these other companies as well. You're creating a market that before wasn't there. Therefore, you're creating margin that before wasn't there. And it'll be very interesting to see that in Q1 of 2024. Of course, we are only ramping up the charging systems for other vehicles. Ford just opened, Rivian just opened. So for the end of 2024, I am bullish on charging. I'm bullish on the profits and margins that will come from this, because these charging stations were already going to be built for Tesla vehicles, but now they're being built for other vehicles as well. So another new venture that will be coming for Tesla, and that is the robot that they have coming. I forgot the name of it. Tesla bot, robot, whatever. They have a robot coming. And how's that robot going to work? Well, it's going to work off their FSD knowledge. And of course, it's not going to be obviously driving around like a car. It's not going to have all the information that's coming from FSD, but they are using similar tactics as FSD, where it walks around, learns, and has an AI system built into it, where it's able to grow and learn and adapt to its environment. And it has been improving. It's improved from Gen 1 to Gen 2, and now it's going on to Gen 3, where it's slowly doing tasks on its own, is able to pick up things, put things together. It is doing very well. Of course, this is a long term. This is a long-term bullish on Tesla. This is probably not coming any near in the near term of maybe even 2026, 2027. This is probably going to be a little bit of a time before we get to these things walking around and working in the workshops and in the factories in general. But we have this coming as well. So it's bullish. It's bullish. And of course, like mentioned before, Tesla marketing has increased as well. This is New York City, where they drove around in the new Cybertruck, pulling a Model Y in the back and promoting not only the Cybertruck, but also the Model Y and every other vehicle that they have. This was in the Javits Center, where they had the car show for this year in New York City, and they were pulling this around all over New York City, increasing their marketing. And this is not the only marketing they have increased as well. They've increased marketing on Instagram, on Twitter, all the places where you would have most amount of people, on TikTok, on Twitter. They've increased all types of marketing. They're putting themselves out there, and it will be interesting to see in Q1 financials as well, to see how much they've spent on marketing and how much they've actually received back off of that marketing. So very bullish. It's looking very bullish. Of course, this Tesla stock price does not compare to what we're getting from all this information with the marketing being improved and the charging stations and new vehicles and FSD. But what can I say? A lot of people still see Tesla as an automotive company, and it is an automotive company at the moment, but there's a lot of stuff that's going to be changing soon of this year and next year. So there's a lot of things to be bullish about. Now, like mentioned before, everything's about margins. Margins, as you can see in the title above me. Everything's about margins. And if we look at Q4 2023 financials at the end of Q4, the Tesla margins weren't that great. And of course, like mentioned before, in 2024, interest rates and inflation was high and interest rates were going up. So sales were coming down, and therefore the margins were coming down because they were decreasing the prices of their vehicles. And the margins for Tesla was 18.2% for the year of 2023, compared to 2022, where it was 25.6, 2021, where it was 25.3, and so on. So they did decrease margins for 2023. But of course, that is because they were ramping up other productions. Like I said, they were creating the new Model 3 line. They were working on the Cybertruck. A lot of things that they had to put their finances into it and put more money into other products. Of course, for Q1 of 2024, I expect the margins to stay the same or maybe even a little bit lower because we did cut prices on the Model 3 and the Model Y, so we could go ahead and sell more products. But of course, because that did not work, we are raising prices back up on Teslas, and therefore margins will increase back up, as well as probably Tesla is pricing in the fact that interest rates might be coming. Of course, like mentioned before, we are getting the news that maybe we might get one interest rate cut or maybe no interest rate cut. But overall, if Tesla's pricing in at least one interest rate cut, that is still bullish because they will be able to raise prices at least a little bit to increase margins on their finances for 2024. So, like mentioned before, I'm invested in Tesla. These are my positions in Tesla. I have TSLA right here in the top left and TSLY on the top right. Bottom right. I am down a good amount. Like I think a lot of investors are. I am red. I am red for the year. My portfolio is red for the year. But that is to be expected. SPY or S&P 500 is falling. The market is falling, and we're not having good times at the moment. But there's not much you can do. I'm still invested in Tesla. Of course, TSLY continues to pay me dividends, a dividend paying ETF, and that's a whole different story. I'm not going to get into that. This focus on Tesla. On TSLL, I am trading the wheel strategy. Right now I'm selling covered calls on TSLL, so I am doing that as well. But overall, even with these positions being red and almost down 50% on both of them, I'm still holding. I'm still holding long term because I believe that Tesla will go long term. It will grow and it will continue to grow because those margins are still there. That income is still there. Those vehicles and those products are still growing and they're still desirable, and they have not reached the mass markets just yet. A lot of people still don't know how cheap Teslas are. They still don't know how good Teslas are and all the things that they offer. So that is Tesla. That is my positions. And that is why I believe that Tesla will go up and why I am bullish on Tesla. And that's my stance on Tesla. Even with all the interest rates being high, inflation being high, deliveries being low for Q1 2024, Tesla still has a chance to go higher, and it will go higher. I understand it's a car company at the moment. They are shifting slowly, and I don't think Wall Street understands yet. But honestly, I think they do understand. I think they just don't want to admit it. They have been saying that, Tesla's worth $120, Tesla's worth $100. But every time they say that the value has dropped of Tesla, they buy more shares. So that is why I don't listen to those banks. I don't listen to the funds, because you can't go out there and say Tesla is worth this amount and then buy more shares that same day. So that is my take. I believe Tesla has way more to go. If we're looking at a company like Nvidia, that their whole bet is on AI and they skyrocketed to $1,000 level per share, I think Tesla could outpace that. They have vehicles that are very good. They have vehicles that have good margins. They have vehicles that still haven't even come out yet. Cybertruck hasn't even scaled yet. The Robotaxi is yet to come. The Model 2 has yet to come. And all the other vehicles that have planned as well that we don't even know yet. They are still reiterating. They're creating a new Model Y. They're redesigning the Model Y as well to be similar to the Model 3. They have FSD that's growing and improving every single month. They have a lot of products that are coming to the market, and this market has not even reached its max potential. It has still not reached the mass market and the mass population of all over the world. So when it does, I believe Tesla will grow and it'll increase. And a lot of people do. I think a lot of people do. And there's just a bunch of bears that want Tesla to go down so they can buy more. And I hope their plans do work out, because I would buy more as well when the Tesla goes down. And I continue to buy more and buy in. Of course, I diversify as well as possible. Don't want to over invest into Tesla. Diversify. Always don't forget to diversify. But that is my take on Tesla. That is the video for today and this week. And I hope you guys enjoyed. Hope you guys stay invested. Don't put all your portfolio into Tesla. Don't risk it all. Of course, diversify as much as you can. Tesla might be this great company and have all these great products coming out and all the great margins, but it's still a risk that you have to take when investing into it. So be smart with your investments, diversify, see what's right for you, and I'll see you guys in the next one. That has been me.